Gerd Johansen from Hamburg Trust. Concerning redevelopment of shopping centers, talk about has been going on for some years about the potential of redevelopments, and there has been studies on that. Corpus Rio did one a couple of years ago and measured the potential, market potential. Until now, I didn't really see a large portion of the market concerning redevelopment. So why should it? Why should it expand now? Why should that be an interesting investment?
I agree that there was a discussion, or is a discussion in the market, I think since 2009, when it simply turned out that investors don't want to take development risks and banks don't want to finance developments from the ground. So, and suddenly a number of developers had to reinvent themselves as well. And they also spotted that, in particular in the Germanic markets, a lot of schemes were built in the 19s. And that there will be a point in time where you need to upgrade that whole conception. And I think probably 2009 was a little bit too early. But time has moved on, and we are 6 years later now. And another year will pass. But I think over the next 5 years, there are so many schemes which need a facelift, and a substantial facelift. So if you look at shopping centers that have received very positive credit in the press, in the European shopping center press, is, for example, the Palais Fest in Recklinghausen or the Minto in Mönchengladbach. They have introduced double-height facades in the shopping center market, which the German market so far hasn't known. So suddenly the retailers have iconic shop fronts and present themselves with flagship stores, which the shopping center market didn't know in the past. So that has come to Germany, and I agree also there are mixed-use projects like the Milaneo, that is quite interesting. I worked for Commerz Real 7 years for Henderson Global Investors. Our task was always to identify asset management potential. You buy something for your yield, but you identify some potential, for example, a huge gap in non-recoverable costs that you can close down over time. If you improve the current scheme, you bring in better leases. I think this is something very interesting. If you look at a standing asset with some leakage as well in the NOI between the gross rental income and net rental income, and you can improve that situation by improving that whole asset and you get your tenants on board, this is where you suddenly enter into a return corridor that looks interesting again. And that is why I believe that, rather than moving in risky developments in other nations, I think a redevelopment in Germany can make sense.
But such shopping centers function generally. They have some reason for improvements, but they don't have less frequency or lack there.
When you get older as a shopping center, you might after a while also lose some customers because there's more competition and you are not the best show in town anymore. Okay. But I think shopping center investors, there are specialized teams nowadays within the investors who only look after shopping centers. They are familiar with capital expenditure projects that have to come after a while. And I see there's a huge number of shopping centers in Germany where we will simply, when we look at the construction age, we will now come to a point where they need a conceptual upgrade. Yeah? And that is why I think that will happen. And it will be better to do that than doing nothing and losing your customers to a competitor or to the internet.